Homeowners across the country are in for a rude awakening because insurance premiums are on the rise again. Last year, average premiums rose 21%, and unfortunately, they're expected to rise even further this year. What's behind this and what can you do to lower your premiums? Well, that's what we're getting into in today's video. Hi, and welcome back to Stop Being Sold. My name's Michelle, and I'm here with Brian. And well, Brian, this is not exactly good news for the average consumer, especially with what we're seeing with inflation sticking around.
No, it isn't. This year I opened up my personal renewal notice and found my premiums went up 51%.
What? That's what?
$1,700 increase.
Holy moly. So what's behind these escalating premiums?
Okay, well, there's several factors, but I would say that the major culprit is the rising cost of labor and construction materials still. We had the supply chain issues and high inflation, which you remember back in started in 2020. That led to the increased expenses in the construction industry. And as a result, insurers are raising rates to account for the higher rebuild cost associated with damaged or destroyed homes.
Okay, but I thought construction materials were going down in price. Are they not?
Yes, they are. Lumber, for example, dropped 42% in the last 12 months. And shingles only rose 6%. And that's not a huge increase for shingles.
Okay.
But the real issue here, Michelle, is the labor shortage. The shortage of skilled workers in construction is a big problem today. Yeah. There's not enough workers, and there's not enough people stepping into the construction industry to make up for the amount of people leaving it. So costs have to rise to entice workers to come back into this field.
And that's inflationary.
You bet it is. And it's a problem for insurers, which in turn makes it a problem for homeowners. It's a vicious cycle, and it's going to affect the cost of premiums as a result.
So what else is contributing to higher premiums?
Well, when you get your homeowner's renewal declaration on the very front page, it's going to break down and say, hey, this is why your policy is going up.
Did it say just like that? Hey.
Yeah. It's like, hey, they need to do a video of it to make it a little more soothing, I guess.
Right.
Like some soft music. Well, anyways, the very first thing is your dwelling limits. And that's the value of the replacement of your home due to a disaster. Premiums have to rise with the replacement value. Mine went up 13% last year as far as the replacement value.
Yes.
So, of course, my homeowner's insurance is going to go up.
Go up, right?
Yeah. And the next thing you're going to see is a section called additional structures. This could be like any other structures on your property, like a external garage or even a greenhouse. That also went up 13% this year.
Okay.
And then you got the next line that increased was personal property limits. This is the stuff inside your house. They're saying replacement cost for everything inside my house, Michelle, went up 10% to $498,000 to replace everything.
Can you contest that? Because they don't know what's in your house, do they?
No, and I could fight that all day long because it's like, what do you mean my stuff's $498? Are you serious? But look, if I've only got $200,000 of value inside the house, I can go back and say, hey, look, guys, this is it. This is all I want covered for because that's all I have. And they will readjust that. Some insurers will adjust that. They'll actually bring it down to the cost. But I don't think it's going to hurt, adjust the needle enough because that wasn't a big part of the replacement cost and the increases.
Got it. Okay. So I have a question. I'm going to shift gears a little bit, but talk about just the disasters that we've seen.
Oh, sure.
States like California, some of them just seem to be getting hit harder with natural disasters than others.
Yeah, Texas and Florida too.
Exactly. So is it the homeowners insurance in these high-risk areas that are facing higher premiums, or is this nationwide? I guess, let me rephrase it another way, meaning do people in, say, Arizona have to foot the bill for a Texas storm?
That's a great question. First off, you pay insurance premiums based on your zip code.
Got it. Okay.
So, and certain zip codes like mine here in Texas have been labeled high risk area due to the hail and wind damage that we received the last few years.
Sure.
So on my policy for the coming year, premiums have virtually doubled because of wind and hail in my area. Okay. What they want to do is raise prices high enough to force you to go to a higher deductible to save money. Okay. And let's stay with the wind and high deductible just for a second here. Many insurers are now starting to push for a mandatory 2% wind and hail deductible instead of the normal 1%. They're trying to do it on a national basis so they can show here's a way for you to save money on your premiums.
So what they're really doing is putting more of the risk off on you. Is that
Exactly.
accurate? Okay.
Exactly. And here's my reasoning behind what I think they're doing. Being that I've been in the insurance business as long as I've been in it, this is going to force homeowners to think twice about making a claim.
Sure.
If you're paying a 2% wind and hail deductible versus a 1%.
100%. Yeah.
Only those with a major claim will actually file, because not many will have the 2% deductible readily available. Yeah. So, for example, a 2% wind and hail deductible on my house, where the insurer says it's worth $803,000 to replace it, my deductible is $16,600. And by the way, this 2% is based on the value the insurer gives your home, not the value of that new roof.
Sure. Right.
So let's say I needed a new roof and the roof cost $40,000. I now have to pay $16,000 of a $40,000 roof.
Right.
And now if I get hit with a small hailstorm, am I really going to want to file a claim to replace that roof, or I'm going to wait for maybe the next 2 or 3 to hit it? So
I would wait.
Yeah, exactly. And most people won't do it. Okay. Also, this helps eliminate some fraud where roofers are going door to door after any major disaster to get you to replace that roof. And then they tell you that they're going to cover your deductible if you use their services. And of course, they're going to have to jack up the price of a new roof to offset that $16,000 deductible. Yeah. That ain't going to happen. The roofers won't be able to do that any longer. The small 1%, they might be able to squeeze by with it. But when you start doing a 2%, the price is going to be so high that the insurance company is going to fight it.
Yeah. So natural disasters hit, premiums go up. And then because everyone has the damage, there's a surge in demand, which drives up the price. And also there's a labor shortage problem.
Exactly.
So it's,
it kind of gets worse here too, though.
Great. Tell me.
Think of these high-risk areas like California and Texas, where we've seen many times where the insurers are actually walking away from these areas and no longer wanting to do business there.
Yeah.
So there's a risk that insurers will walk away from your area and refuse to write your homeowner's insurance policy because they no longer want to accept the risk in your area.
But you still need homeowner's insurance, right? If you have a mortgage, doesn't the bank require you to have the insurance?
That's right. So what are you going to do? You're now going to have to go with an insurer with a much higher prices and probably a higher deductible. And it might be an insurer that you had to leave years ago because their service was horrible.
And you have to put up with it because you have to have your home insured.
Yeah.
So you're screwed.
One final thing I want to mention here. Even regions that were previously considered low risk are now viewed differently because insurers are worried about climate change.
Okay.
Homeowners in these areas suddenly find themselves hit with substantial premium hikes as insurers start to adjust their risk assessments.
Okay. So once rates go up, they're never going to come down again, are they?
Have you ever seen it?
Well, not really.
I've never seen it happen. So in 25 years in the insurance business, I've never seen it happen. So,
okay.
And think about who and what else this affects. If I'm a homeowner and the cost of your premium goes up $1,700, what about landlords and rents?
Well, yeah, if they go up, I would think that landlords are going to pass on that expense to the renter.
Well, they're not in the business of taking on more expenses and losing their profits, right?
Sure.
So, and think about this. You take that $1,700 increase, divide it by 12 months, that's an extra $141 a month. Do you think that landlord's going to eat that?
Heck no.
No, most won't.
All right, let's shift gears here. Are there tips that you have for homeowners, people watching now, on how they can lower their premiums when these renewal notices come in?
Yeah, first thing you want to do is review that policy in depth. Okay. Make sure you understand your current coverage and any changes that might have occurred. I always like to, on a side note, I like to go back and grab last year's declaration page and compare it to the new one.
Right.
And you can download them off the insurance carriers' websites. Okay. And make sure you look at your coverage limits, make sure they're adequate. And if there's any opportunities though for savings, like I said, going back and getting the insured to say, wait a second, my replacement cost for my contents, $500,000. No, it's more like $200,000.
Real quick, you can call your insurance carrier and negotiate, right?
Yeah, definitely. Yeah. Call your agent first. Sure. And If they're like, oh no, they're not going to do anything, call the home office. You got an 800 number on your policy. Call
Sure.
them. Bypass that agent, because who loses if you drop your premiums?
The agent.
The agent loses that renewal commission by whatever percentage you drop them premiums. So,
Okay. All right.
Second thing, improve your credit score.
Hmm.
Over the years, I've argued that your credit shouldn't have any factor in this.
I didn't know it did.
It does, but
Hmm.
there's been internal studies with loss mitigators, and these insurance companies have determined that somebody with a lower credit score is more likely to file a claim.
Huh.
People with better credit scores may have more cash reserves to cover a small claim, and
So
they won't want to file that claim, right? But somebody with less cash reserves and possibly lower credit scores will file a claim instantly because they have other access to funds to pay for
Right.
even a small claim.
Got it.
So you need to get your credit score up if you need to. Okay. Another tip is make sure you shop around. Why settle for the first quote or renewal notice that you get? Why can't you explore multiple insurance providers, compare their rates and their coverage options? Shopping around can help you find more competitive premiums. And my last tip is, how about mitigating your risk?
Okay.
Take some steps to reduce your potential risk associated with your property.
Yeah.
This could be implementing safety measures like security systems or making structural improvements to protect against natural disasters.
Yeah. I mean, and that's a big one right there. Just prepping
Improve your
home,
property.
right?
Yeah.
All right. Those are great tips. Thank you for that. Listen, if you like the content of this video, hit that like button, help us grow this channel. And do not forget to subscribe. Brian and I put out videos on a variety of topics pretty much on the daily that help you make the best decisions for your financial future. And also, we're going to drop a video that we did on the growing divide between consumer sentiment and economic data, and whether or not we're being gaslit or
What's going on?
what that belief is going on. It's been a very popular video, so go check that one out. Link is going to be in the description. All right, Brian, this has been a great conversation. Few things in here I had no clue about, like credit scores and insurance. And on that note, I want to ask you a quick question. They do that for car insurance, right?
They sure do. Same thing.
All right. So get those credit scores up, people. All right. Thanks, Brian, for this. Appreciate it. And as always, thanks to everybody who watched.
Thanks, everyone. Have a great day.